All right, hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks. And in this video, I want to walk you through a brand new trade that is setting up for us with our reversal wave trader program. In yesterday's video, I talked about one of the big updates that we're making to the RWT program with our active trader mode. It's designed to keep us more active. It's looking for more of a scalping type approach. And what we classify as scalp is holding anywhere from 1 to 3 days. It really is looking to take advantage of these short-term directional moves that we have seen quite often in this market so far this year. If you have not had a chance to watch yesterday's video, I highly recommend that you go back and review it as we do lay the groundwork for this new active trader mode. In that video, we talked about the ATR, or the average true range, on SPY. SPY is the S&P 500 ETF, and I've got it up here on my screen. If we go back into the end of last year, we were looking at an ATR, an average true range of over 8, indicating very active markets day in and day out. If we fast forward to current markets, we're looking at an ATR below 4, less than half of what we were seeing end of last year. Bottom line is market conditions have drastically changed. And it's important to make adjustments along with those changing conditions. It doesn't mean I need to go back to the drawing board and reinvent the wheel, but I need to adjust how I'm taking and managing my trades. Specifically, where are my target and stop levels? How big of a setup am I looking for? If I just swing for the fences all the time, in this market with very tight range, it's going to be very difficult. We're not getting the big follow through in both directions like we were seeing end of last year. That applies to us with the active trader mode, because when I go over to the 60-minute chart, which I'll do here right now, and let me switch the symbol to Google. On this new active trader mode, the sizes of the setups are going to change over time, and they self-adjust. It's a dynamic approach. With this idea of having a defined system in place, we want to be very rules-based. I want to be able to take and manage my trades following price action. I don't want to base my decisions off of what my weekly or monthly profit goal is. I don't want to force the market to do something that it's not willing to do. If you take a look at this chart, we love the 60-minute chart because it identifies the swings really, really well. I got the question here the last couple of days, why do we use a 60-minute chart versus a 1-minute or a 5-minute? What we have found is anything shorter than a 60-minute chart leaves you exposed to getting caught up in chop. It, in many cases, can lead to over trading. That 60-minute chart allows us to stay very active without getting caught up in some of the noise. I don't want to be caught in front of the screens from opening to closing bell every day. I want to be able to come in a couple times a day, check my charts, check my trades, and move on with my day. The 60-minute chart allows me to do that. Well, on our charts, you're going to see that we have our NetPicks channels. And you'll notice that those channels are going to be changing. Right? If you notice, the distance between the channels will change over time depending on what the market is doing. As markets get more active, the channels become wider. As the market starts to get slower, like we have seen the last few months, those channels are going to get very tight. It doesn't mean we're not going to get setups in a slow market. It just means we're going to adjust when we're getting in and when we're getting out. We're going to target smaller target levels. All right. So the reason that's powerful is the criteria that I look for on an entry doesn't change, but the sizes of the setup does, and that allows me to self-adjust over time. That way, I'm not focus on one type of market. I'm not dependent on one type of market in order to make money with my options trading. Well, if we take a look at Google, again, this is the 60-minute chart. If I take a look, I've got my setup here, and it's identified by these magenta colored dots. And if I pull over my data box, you're going to see it. The first series of magenta colored dots are below price, indicating a bearish setup. Okay, I'm looking for price to roll over to the downside. And my entry point is just below the midline of our channel. Okay, and just that's that gray line on the chart. And if I put my crosshairs over these dots in my data box, you're going to notice that we have an entry point at 131.30. I know to the penny where my entry point should be at. And as soon as that level is hit, I can come in and put on a bearish trade. Now, to take that a few steps further, I also know where my target level is at. My target level is at the lower series of magenta dots. My target level is at 128.10. And my stop level is up at the upper level of magenta color dots. My stop initially is up at 134.76. Everything is outlined for me on this trade. Before I ever get into the trade, I know the exact route I'm going to take to close it out. As you'll notice here on the chart, we did come down and we touched that level early this morning. Once that level is hit, I'm going to go ahead and put on a bearish position, which we'll talk about in just a second. Now, here we are going into this afternoon. Price still hasn't broken below that entry. If you missed it initially this morning, maybe you were tied up with work, maybe you didn't have the ability to check the charts, not a big deal. In most cases, you're going to have multiple opportunities to jump on board the trade. Here's an example of that very thing. I can come in later in the day as long as we are still right around that entry point. We haven't seen this thing run away to the downside. I can go ahead and jump on board. Now, with a bearish trade, I'm going to jump over to the trade page. With these being very short-term trades, I'm either looking at that current week's expiration cycle or I'm going out the next week, the next expiration. In many cases, I am typically in that 3 to 10 day range, 3 to 10 days left to expiration. That has me looking at the August 4 cycle, the August 4 options. And if I come over to the put side, I need a bearish position. In this case, our standard trade is taken using the long puts. It's an aggressive bearish position. I have one way of making money. If I buy a long put here, I need the stock to move lower. I need it to do so quickly. If it takes too long or if the move isn't big enough, that's going to hurt me. Could I use a more conservative strategy? Could I sell a credit spread? You could. But with this being such a short-term hold, my standard default way of taking this trade is just buying an individual put. So we're going to go ahead and take a look, and I'm going to take a look at the 132 puts. They have 3 days left to expiration. They're currently trading for $1.26 or $126 per contract. That $126 per contract, that is my max risk on the trade. That's the most I can lose on the trade. If the trade goes against me, it is that defined risk scenario. I don't want to have an undefined risk trade here. I want to know what my worst case scenario is just in case we are wrong. Right? We are going to have losing trades. It's part of trading with any system. I've got to be prepared for that. I don't want to get wiped out by one losing trade. I can certainly use a tighter stop. I could use a 70% stop, for example, and limit the damage on a losing trade. Certainly can do that. And we talk about that in the training. If I went ahead and bought the 132 put right now, it would immediately leave me with that bearish trade where I need that stock to move lower. Going into this afternoon, going into tomorrow, I am totally dependent on the stock moving lower. Now, by default, let's go back over to the chart. My target level would be down at 128.10. I would want a move to the downside. As soon as that target level is hit, I would go ahead and jump out of the trade, right? It doesn't matter what my outlook is at that point. We could see that target hit, and you look at the market and you're saying, we are going way lower. The market's going to crash. Does not matter. As soon as that target's hit, I'm going to go ahead and close out of the trade. It could be, depending on how quickly the move happens, it could be a 50% return. It could be a 100% return. It all depends on how much time decay has added up at that point in time. All right, so that is the trade setting up for us. Highly recommend that we just track this trade here. If you're watching this video trying to get a feel for, what does this active trader mode look like? Take it in demo account. Maybe just track it here. I'll circle back with a video over the next few days. We'll take a look and see what this trade ends up doing, but just track it here. All right, that way we can get a feel for how the system works. What is a typical holding time? What does the profit look like? What does a typical loser looks like? That way you can see full picture how to take these trades with our new RWT Active Trader Mode. We're taking a look at Google here. The system can work on any market as long as that market is very liquid, has very liquid options, especially in the weekly cycle. And then also, I want to trade products that have a track record of good movement back and forth. I don't want to trade an ETF that makes a move and then just sits there for weeks at a time. I really want to go where the movement's at. So in many cases, it's the tech names, Apple, Amazon, Google, Microsoft, Meta, the index ETFs. I want to go where the activity is at. And that's why we're taking a look at Google here today. So again, I will circle back over the next couple of days. We'll take a look, see how this trade plays out for us. If you have any questions here on this trade, feel free to post a comment on the video. You can always email us directly. Mike@netpicks.com is my email address. I'd love to answer any questions you might have. So I will continue to post these videos here this week. As always, if you've got questions, we'd love to help out. We're super excited about this new active trader mode. So I'm going to wrap this video up here. Again, I'll be back with you guys over the next few days with our next video.